Now here on Kiwi.
The Radio Whammo Breakfast.
The voice of the creative economy.
With Vincent Heeringa.
Indeed, Vincent, from Ideologue magazine, ideologue.co.nz. Morning, Vincent.
Good morning, Whammo. How are you?
Good. And it's a big day for the opposition party, for Labour today. After all the leaks over the past couple of weeks about the capital gains tax, they are going to announce it today and their full package. What are your thoughts?
Well, I think it's been a masterstroke by Labour. I wouldn't have picked it myself, but as a few people have noted, it's been one of the top trending topics on Twitter, bumping Lady Gaga and Lindsay Lohan off the list.
Isn't it amazing? People discussing really, proper serious stuff that actually affects us.
Who would ever thought the tax was so interesting?
Yeah.
I think what it does is it gets to the heart of what a lot of people feel about New Zealand, that, we all fundamentally know that investment in housing is not the answer to our economic woes. Actually, I think people get that. You don't have to be an economist to figure that out. And the capital gains, or the lack of a capital gains tax, really is effectively a loophole for property owners to pay no tax on the capital gain of their properties.
Do you think New Zealanders are coming round to the realisation that we've been misbehaving for years?
I think that's probably right. I think the realisation that young people in particular are being locked out of the property market due to high prices it annoys a lot of people. A lot of people who are now in their 30s are and sort of occupying positions of power in terms of media and spokespeople for organisations probably were the first generation of they've been saddled with student debt, and so debt is. In the past with the boomers, debt was something that you settled yourself with in confidence that you would be rid of it because your house would go up in value, and debt was mostly associated with your property. But now debt is something that we live with every day in terms of not just our mortgages, if you're lucky enough to get one, but your credit card and that student loan, which is like a millstone around many people's necks. And I suppose I'm just speculating, Whammo, but I wonder whether the sentiment is an anti-baby boomer sentiment, looking at these sort of 50-plus people and saying, well, it's all very well for you to live off the capital gain of your property. You've locked everyone else of the market. Yeah,
and I suppose it's this realisation from the younger generation that we are entering a new time. It's a very uncertain time, and by and large, over the past sort of 3-4 decades, things have been relatively calm around the world, haven't they?
They have, and there's also, I think, a global awareness, and the ability to move to Singapore or Australia or the UK or the US is so much easier now than it has been in times gone by. And so, if New Zealand offers no prospects for younger people, graduates and young professionals, then they'll move. And everyone knows that, everyone experiences that. We all have relatives overseas. And, I could be completely wrong about this, Whammo, but I do sense that there is a shift in the demographics of power from older to younger.
Yeah.
And Key and National have played so beautifully to that, sort of that baby boomer market, which, let's face it, has been probably, one writer called them the selfish generation. These are the people that have received state welfare from the time they were born, the houses they were born into, right through to their pensions now. And why don't we shift the age of super up to even to 67? It seems to be such a contentious issue, and yet 67 seems pretty young these days.
These are all
interesting. I suspect that's what is driving this capital gains tax. A fundamental understanding of economics and the shift in age power.
Well, it certainly draws a line in the sand for this year's election as well.
Yeah.
Couple of big issues there, state asset sales and capital gains.
So there's one really good, interesting story on Ideologue this morning, and that is there will be two quite big investments. One in this Pacific Fibre cable that will give us a second exit out of the country in terms of the internet. So they've got their first really big customer.
A customer in New Zealand?
Yes. So Pacific Fibre, have I got time to talk about this?
Yeah.
Yep, cool. So Pacific Fibre is a infrastructure company set up by Trade Me's Sam Morgan and Stephen Tyndall and Rod Drury, who's the founder of an internet company called Xero, and a bunch of other guys. And it's not what you'd normally expect sort of IT software people to do, but what they're doing is they've realised that we really need another pipe into New Zealand, because the speed of our internet relates as much as it does to the local loop as it does to the international connections.
Indeed.
And so they're laying a cable, a giant cable across the Pacific to the United States. And they got their first customer, a consortium of Crown Research Institutes and university called RIANS. And this group is effectively a government agency, but they can see the value in fast internet for research purposes. They are the first customer of Pacific Fibre, so they're on their way.
In order to start laying the cable, they're going to need a few more customers, aren't they?
Oh yeah, lots more. It's about a $400 million build. This one is a $91 million customer, so that's pretty good going. But yeah, this will give the market confidence that they're serious, and that story's on Idealog. And then coming up this morning, I don't know if it's gone live yet, but very interesting new fund again, there's a Trade Me connection. I don't know, Trade Me, I'm getting sick of the Trade Me connections.
Yeah.
But the former shareholders of Trade Me have got a company called Movac, which is an investment company, and they've just announced that they have raised a whole bunch of money to invest in startups in New Zealand.
Oh, brilliant. This is following on also from the ICE Ideas conference on Friday, where they set the ambitious goal of 3,000 companies in New Zealand by 2020 that will be significantly exporting services overseas.
Yeah. And, the really interesting thing, Memo, is not a single one of those investors could give a damn about capital gains tax. They realise that they have to pay their way, and what they want to do is make money by making products and services, not by rorting the tax system.
Indeed. Vincent Heeringa, thanks very much. Vincent Heeringa from Idealog magazine, idealog.co.nz.